Hello, and welcome to the Performance Leadership Learning Lab's virtual roundtable session. Today, we'll be changing the format up just a little bit and conducting a podcast-style one-on-one interview with William Lindstrom, who just returned from the annual Exit Planning Institute Summit in Nashville, Tennessee. I'll be interviewing Will to learn about best practices and insights he discovered during his recent trip to the Exit Planning Summit. Let's begin with introductions. I'm Will Gladhart, the Chief Marketing Officer at the Culture Think Tank and at the PL3. I'll be your host today. Will Lindstrom is one of the founders of the PL3, and he's also a co-founder at the Culture Think Tank. Will, thanks so much for taking the time to join me, and welcome.
Yeah, no, this will be great. Thank you.
Excellent. Will, before we dive into questions, would you give our audience an overview of what the Exit Planning Summit is and why it's relevant to the PL3?
Yeah, no, it's a really good event. So to give you a little bit of context, the Exit Planning Institute, otherwise known as EPI, is an organization that really focuses on helping those smaller companies figure out and the owners figure out how to successfully exit their business and transition their legacy. So they look at all sorts of different types of things of not only how do you increase the overall value of your organization, but also making sure that they call it the three legs of the stool, making sure that also you're personally prepared to leave. A lot of people, have difficulties letting go of their baby. And then also making sure that your personal and financial aspects relating to trusts and taxes and those types of things are all lined up. So making sure your business is prepared, making sure your financial business, personal is prepared, and making sure you're mentally prepared. So that's what EPI is all about. And the summit is a great opportunity where all the different folks come together and they talk about the latest trends. And largely they focused on what are the challenges that everybody's facing in the industry, and helping these folks get over the hump. How has changes in legislation and things affected how you should view the world of exit planning? And then also really focuses on the networking. So one of the things that I like most about EPI, it's about a team environment. So bringing different disciplines from M&A to wealth management to financial planning to tax to legal all together to really help create that opportunity for these founders who've been working in the business for 20 or 30 years get out successfully.
Well, thank you for sharing that. Sounds like a really fantastic event, and it obviously sounds like there were lots of SEPAs there as well. So, what was the Exit Planning Summit? What was the primary theme this year? And were there any particular topics that stood out?
Yeah, so I would say that there were a couple of themes. The biggest theme that came out was, and SEPA stands for Certified Exit Planning Advisor. So that's one of the credentials or the designations that the EPI can award people or authorize people based upon completing the program. But largely what the themes were about is how people don't like the word exit planning, which is really interesting. So it's the Exit Planning Institute, but people don't like the word exit planning because in people's minds, cognitively and psychologically, it sounds very terminal. Like, I have to give up my business. I'm over. My life is over. Everything's over. So that was one of the biggest things about how to rethink and reframe exit planning is just really good business preparation. So you can start, you should start planning for your exit way earlier, not look at it as a terminal event, but as a process, which, I went to USC and graduated with my MBA, but also a concentration through their entrepreneurial program. And we always started with what's your exit in mind? Like, you have to know how you're going to get the value of all of your efforts out of your company. Otherwise, you can't successfully retire because you need that equity out. So that was one of the biggest themes. Like rethinking about it as like legacy planning, those types of things, transition planning, next chapter planning, where it's not just about exiting. So that was the first theme that was really interesting. The second theme that came out of it was an overarching kind of challenge that is arising with people having their identity stuck in their businesses. So what this concept of an identity gap I thought was really interesting. And how do you start to help people let go of their businesses? And one of the things that came out of it that I thought was really interesting was how critical it is for the buyers to know that you're willing to let go. One of the things I didn't really realize was how much how many deals get up to the last 11th hour and then they fall apart because they lose feet. And so like this, if the buyer feels like the seller is really committed to leaving, they might give you an extra quarter turn or half turn on your valuation because of the reduction of the risk of potentially lost hours for a deal that goes dead. So that was the second theme that really came out of it that I thought was interesting. And the third one was this growing sense that you had to have a team, like a village or a tribe or a clan of people around to help, because not everyone can do everything. You're going to need someone who knows taxes, someone who knows investments, someone who knows legal. So it's really it takes a team to help optimize and maximize or get that best return for the founders.
Okay. So what was the biggest surprise takeaway from this year's summit?
I think the biggest surprise that I came away with out of all of it is EPI looks at three big gaps: the profit gap, which impacts the value of the company, which impacts the wealth gap, which is how much money they need to retire and the lifestyle that they're looking for. What came about was just this recognition that there's a lot of other gaps that are out there. So, for example, I touched on the identity gap. So that's like a big gap and how do you start to measure it? How do you start to think about helping the business owners in their language, in their mindset, understand that when they sell their company, they got to think about their next chapter. So that was one of the things, was how big of an issue that was. I mean, they always talked about it. It was always something to work on, but and I think that there's this now recognition that there's a new gap that needs to be addressed, and so that is something that EPI and Scott Snyder, who's the president, is zeroed in on for the 2026 period. So it'd be interesting to see how that comes out. From a personal perspective, and for what we've been working on here at the PL3, what I thought was really interesting is that there's also another gap that is coming up, which is the scale gap. There are a lot of companies, really, really good companies, below that 1 million in EBITDA earnings that just can't sell. They just cannot get out of it. And, the metrics show about 80% of these companies will never be able to sell. And 60% of these companies are going to just simply shut down. And so there's this tremendous amount of wealth out there, and a tremendous amount of locked up value that's never going to be realized by these founders, and these CEOs have been spending their lives on it. So that was really surprising, as how, I mean, we've been addressing that at the PL3 as through our concept of syndicates. But what's been so surprising is how big of a problem it is facing the other disciplines, from wealth managers to financial planners to tax accountants they're all running into this problem, and there's not really a good viable solution out there.
Right. So it sounds like there's an opportunity for both you and PL3 to possibly address and start to tackle this problem because it is such a widespread issue in the marketplace.
Yeah, I think that's yeah, that's the really good takeaway. I mean, that's a good question. So I think what it really does, what the EPI conference or the summit really showed, was that this scale gap, the too small to sell, is really a big problem, and much bigger than I even expected it to be. And the work that we're focused on at the PL3 to develop the syndicate model and the value, the syndicate value acceleration methodology or model that aligns to the EPI is method or methodology, is really needed. So I think that was one of the biggest takeaways, that there are about 10 million to 20 million companies that are stuck. And everybody's facing the problem. It's a big problem, and it also is going to take a team to get around it. So I think having the PL3 create a framework that then allows the other extended members of the exit planning community, or other members that support founders and owners, step in and support it, is going to be necessary. So it was really insightful on that one, and it kind of reaffirmed, or it didn't kind of, it really reaffirmed what we're doing here at the Performance Leadership Learning Lab, and how critically important it is and how timely it is. So that was good to see.
Right. It sounds like the Exit Planning Institute, as you mentioned, that team approach really orients with the PL3's approach, and then, looking at the marketplace and businesses. So are there any challenges you discovered preventing founders and companies from finding a pathway, as you noted, because there's so many in the marketplace?
Yeah. So there are a couple of areas that I thought were surprising. And one of them that I thought was most surprising is this: what I don't know how else to frame it other than maybe put my kind of doctoral hat on and what I'm studying here at Vanderbilt, is this idea of bias. There's this buy side bias. So those people that have been in the industry for a long time buying companies and in some degree selling companies have this predetermined bias on how it has to be. And as we got into it, like one of the biases that just came up is you will never get, just to remind everybody, like our syndicate idea is if you have a company worth 600,000 in EBITDA, there's really no market to sell it. However, if it was 10 times bigger, there's a big market with good multiples that everybody wants. So the question and what we've been challenged here at the PL3 is how do we take a 600,000 size company and make it 6 million so it's sellable? And the model that we came with is, well, let's find 10 other 600,000 size companies that create a portfolio that are viable to sell, which is what private equity and family offices and strategic buyers are looking for. They want that portfolio of companies to be able to buy. It's what they've been doing before in the past. The only difference is that we're bringing them together as they're operating separately, but they're selling collectively. So this model of they all benefit in the sell side roll up and the sell side multiple expansion, and they don't have to go through all the efforts of merging and all this sort of stuff, which is the impairment to being able to happen. So even though we've been able to prove this with the multiple syndicates we've got coming out of our methodology already, there's this bias that it can't happen. And one of them is you can never get 10 founders to agree to sell. And it was interesting how often I heard that. And I was like, why not? Well, because you can't get 10 people to agree to sell. Like, well, if you think about it, we're already done it. And they're like, well, that's a one-off. Like, is it? Or, because we've got 4 of them now that are getting ready to go this quarter. Well,
Right.
and you can see their wheels spinning. So there's this. So I think what's holding it up and what we're working on is we need to focus on education at the PL3, which is why I think this roundtable and some of these other podcasts we're working on is to help people and especially help the advisors understand that you can actually get 10 companies to sell because guess what? Their profile is all the same. They're in their 60s. They've been trying to sell. They have no pathway to success. They have a choice of shutting down or this. And if they do this, they can maybe get their multiple of 600,000 can become $2, $3, $4 million, which closes the wealth gap. And so so it's an educational thing. So there's a lot of this biases and like the big 3 biases where you can't get everybody to sell. They all have to merge. They all have to be on the same ERP, which is not true. They just have to have the same reporting standard, which AI now enables. So those are some of the biggest takeaways that came out of it. And then surprisingly, there was the flip side, which was the other big takeaway, was when I said, okay, here's what we're doing at the PL3, here's how our solution is focus it, bring them together. Then you had the other side, which is more of a minority side of group of people where they're like, I could see that working. How do we step in? How do we help? So once you get over that bias, all of a sudden this team starts to form around this idea, which is now enabling these companies that have historically been stuck, can't sell. I mean, how sad is it? 60% of companies below $1 million are just going to close their doors. I mean, how much lost opportunity is there? How much lost capital is there? How much lost investment opportunity is? So
Right.
once that awareness comes in, it kind of shifts. So those are the 2 big takeaways with both sides of the equation. It can't happen. Oh, that's an idea I've never heard of before. I really like it. How do I help?
That's definitely a dichotomy. It sounds like we've always done it that way too. Let's try a new approach.
Yep. And the resistance to a new approach.
Oh, absolutely. And I'm sure that the education is, as we know at PL3, the education mountain is a big one to bring not only to the founders, to advisors, to the groups that are helping these owners bridge that gap. So we're almost at our time for today. Is there anything else you want to share about your trip to the EPI Summit?
I think from from a conceptual understanding, I think the biggest for 2026, we're seeing the biggest opportunity is really aligning all the different types of resources that are out there. So, for example, I had the opportunity to sit with a gentleman who specializes in helping small companies sell their commercial real estate, and another gentleman that helps companies optimize their taxes and mitigate their taxes. And what I'm realizing is these types of resources, these really smart people that have these investment opportunities that aren't available to most people, become available through the syndicate process because you can't, if you're just a $600,000 sale, there's not a lot you can do. But if you have 10 other of your like comrades together and you're at 6 million, and all of a sudden your enterprise value is now, let's say 30, 40 million, all of a sudden now when you have an enterprise value or a sale price to the market at 40 million, now all of a sudden these opportunities that don't exist for the microcap or the market street, these sub 1 million EBITDA earning companies, all of a sudden becomes available. All of a sudden you have opportunities to invest in opportunity zones that reduce your capital, that reduce your tax base, that actually defers taxes, and actually in some cases treats the interest and the proceeds as if it's a rock. So it comes back to non-taxed. I mean, that's just one simple example. And it's just really exciting to see when the syndicates, when these small companies can come together, they're not only going to benefit in the multiple expansion, what they're really benefiting from largely is they're going to benefit from the other strategic investment tax estate planning opportunities that would have been precluded from them anyway. So that's the one thing that I think as the PL3 we need to really step into is looking at how we bring those other specialists to market, or how we bring those other specialists into the conversation, because all of a sudden, like one idea that came out of it, well, we have, let's say, like we're working with one group of doctors, there's 14 of them, they have 12 offices that they all own. Well, if they sell them all individually, what's the value? A lot less than if they bring them all together as a portfolio, triple netted, fully leased on 10-year leases. All of a sudden, now that's a new opportunity because there's a lot of buyers out there looking for that pre-buttoned up. And now all of a sudden their real estate has 20, 30, maybe even 50% more value than selling individually because they can sell as the syndicate. So that's really the exciting thing that came out of this, was not only can you help them move their multiple, find a bridge to get them to sell, move their multiple, but it opens up so many more opportunities for them to access and leverage markets that only you get if you're a 20+ million dollar exit value.
Right. Yeah, I think that's really interesting. A really interesting observation, and certainly an opportunity for the a marketplace shift. So, Will, thanks so much for taking the time to join us today
Absolutely.
in a slightly different format. We hope the conversation provided a peek into the Exit Planning Institute's 2026 Summit and some of the insights gleaned from the event. This session is part of a monthly roundtable series from PL3, where we explore topics like leadership, organizational performance, AI, cultural alignment, and investor decision-making in greater depth. Next month's topic will focus on a leadership performance theory topic to be announced soon. We hope you will join us. To learn more about us, visit plllab.com. We'll see you next month.